Well, this is really important. It is a conversation that we need to have anyway. So, in today's discussion, I want to talk to you about business lines of credit for a new business, how to get a large limit fast, no matter what. Welcome back, folks, to another edition of the Awesome City Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, I want to talk to you about business lines of credit for a new business, how to get a large limit fast no matter what. The first thing you need to do is to target lenders, okay? You want to seek lenders who approve business lines of credit for new businesses. So we have devoted several shows on this topic, so you want to avail yourself of these shows if you're interested. So here are 3 lenders that will work with you. I mean, there are many more, but we want to focus here on 3 lenders. You have Fundbox. Fundbox is, in our view, the best business line of credit for startups. So if you're a new LLC, if you're S Corp, if you are a new C Corp, this is a good lender for you, okay? And we love the fact that they are very generous in terms of the lending. So they go from $1,000 to $150,000, and the rates are great, 4.66% to 8.99%, and the term 12 to 24 weeks. Fantastic. Then you also have Credibly. Credibly, in our view, is it's great for business lines of credit for poor credit. So if your new LLC or your S Corp or C Corp has poor credit, personally, I'm talking about personal credit score here, you might want to talk to Credibly, okay? And here you have loan amounts that go all the way to $250,000. The rates start from 4.80%, and the term is 26 weeks. This is really good. And what we love with Credibly is that they do have excellent customer service also. And the third player that I want to introduce you to is OnDeck. So OnDeck, in our view, is the best business line of credit for fast funding. So if you're looking for fast funding, you just have your new LLC or new LP, S Corp, C Corp, and you want to get the cash real fast. OnDeck is a great candidate, and they actually will lend you anywhere from $6,000 to $100,000. The rates are a little high though, so you're looking at 36% to 47%, really high, and the term 12 months. So here you have 3 players, and you have to see what really works for you. The thing is that OnDeck is good in terms of speed. They will fund you real fast, okay? But the rate is high. So you need to make a decision about what really is important for you. Is it the APR, or is it just getting access to the cash? Like if you have a great business opportunity that you need to fund real fast, maybe OnDeck could be a great lender. If not, if you have time to wait, then Credibly or Fundbox could be great candidates. The second thing I want you to focus on after targeting lenders is to prepare a solid business plan. Do me a favor, folks. I want you to prepare a solid business plan. If you have a new LLC, boss, I'm talking to you right now. You have your new LLC, you have your new S Corp, new C Corp. It's all shining. You are really happy. Do me a favor by writing a compelling business plan. If you have no idea how to write it, please, you want to hire someone. Okay? Don't actually try to download a cheap ass templates from the internet and try to customize it and just say this is my business plan. No. Hey, I want you to give me a compelling, original, unique business plan. If you're asking for $100,000 in business loan or business line of credit, and you can't spend $100 or $200 in terms of hiring someone to write a business plan for you, then it's not worth it. Okay? Don't try to be greedy here. Or no. You want to invest money so that because the business plan, hey, the thing here, a business plan is actually telling the lender the story about your business. So when your business is new, it has no history. The business plan is the only document that really explains what your new LLC, your new S Corp, your new C Corp will be about. Okay, so it's important. Don't try to. I want to emphasize, overemphasize. Don't download any templates from the web. Don't try to buy a business plan from someone on Fiverr for $50. No. You want to have a solid business plan, a business plan that is not difficult to write. I'm not asking you to write a document that is where I need a dictionary to read. I don't need no almanac to read your business plan. I don't need no glossary to read. Just make it plain for me. Explain what it is. Okay. You want to have an executive summary. You want to have a company description. It's important. Tell me what your new LLC or new LLC Corp is about. You want to mention your products and services. Okay. Do me a great market analysis here. Okay, you want to talk about strategy and implementation. This is important. And you want to talk about organization and management team. Who are the founders? Who are you? Talk to me about you. Hey, I'm talking to you. I want you to write about you in the business plan. Talk to me about your business background, your professional background. Okay, give me some solid financial planning and projections. This is important. You want to talk about your balance sheet. Everything has to be projected. Your projected balance sheet, your projected income statement, your projected cash flow statements, your projected statement of owner's equity. This is important. All right. The third thing is you need to have a funding focus. What is that? A funding focus. It's important. You need to focus on what's important in terms of funding. The thing here is that if you're looking for a large business line of credit and you're not focusing on the right product, you are wasting your time. Okay. So what I'm trying to say here is that you need to understand why you need a traditional term loan versus a business line of credit. In this case, you want a business line of credit. Why? Does your business regularly need access to short-term capital to meet day-to-day business expenses? What is the focus here? Is your business a seasonal business where a credit line could help you bridge your busy seasons? Okay, like if you have a new LLC and you make more money in November, December, in October during the holiday season than the rest of the year, then you better find a way to bridge the liquidity gap you will have in the 9 months leading to October, right? So this is where a business line of credit could be useful. Do you occasionally need extra capital to ramp up new customer contracts or projects? So it's all about just analyzing your liquidity situation and telling the lender where you need the money. Okay, do you have a healthy business credit profile? So those are important considerations. Okay, one thing you need to understand is when we talk about a business line of credit, what are we talking about? Boss, what are we talking about? Do you know that? Do you know what it is? Okay, a business line of credit is a revolving loan that allows you access to a fixed amount of capital, which can be used when needed to meet short-term business needs. Short-term. Okay, a line of credit is one of those tools a business can use to finance short-term working capital requirements such as purchasing inventory, repairing business critical equipment, financing a marketing campaign, bridging a seasonal cash flow gap. So when we talk about business line of credit, I want you to have a key word in mind. This is short-term, okay? Short-term means less than 12 months. In accounting or finance, when you hear the term short-term, it means less than 12 months. Long-term means more than 12 months, okay? It's important. And you have to understand that we are talking about two types of business line of credits. If you have a new LLC, you can get, for instance, a secured business line of credit or an unsecured business line of credit. If you have good credit personally, or you have great assets personally, and you want to collateralize the business line of credit, then go ahead and do it. In that case, we'll talk about a secured business line of credit. But if you don't have no assets and you're trying to actually, you are looking for an unsecured business line of credit, you also have that. The three players that I gave you earlier, that is Fundbox, On Deck, and Bluevine. Did I say Bluevine or I said something? Oh, I said Credibly. You actually can get a line of credit from them unsecured. So you want to have a solid focus on your funding. If you want to get a large business line of credit for a new business, you better have a clear idea about business debt. This is important, okay? What I'm trying to say here is that a business line of credit is a business debt. But the thing is, you want to be very clear about what kind of existing debts you have, because the lender is going to pay attention to your balance sheet. They're going to look at your income statement. They're going to look at your statement of cash flows. Those are important. So if you have receivables, for example, make sure your collection efforts are successful and customers pay on time. Why? Because the lender is going to analyze your ratio of accounts payable versus accounts receivable. Okay, especially if you have a new business and you have no solid track record, and the lender is looking at you and like, oh wow, how come this person has a lot of sales, they have a lot of revenue, but when it comes to collecting those revenues, it becomes a problem. So you better have a clear idea about that. So your business debt, when I talk about business debt, I'm talking about everything on the liability section on your balance sheet. Okay, I'm talking about short-term business debt. I'm talking about accounts payable. I'm talking about supply. I'm talking about any kinds of debt that you have: credit cards payable, short-term loans payable, and I'm also talking about long-term payable. And what I want to see is I want to make sure you have a solid grip on your business debt. And I'm talking about you have enough cash to repay them. If you have a new business, you probably have accounts payable. Who knows? You have a net 30 accounts or net 30 accounts. You want to have a clear budget to pay those, because the lender is going to pay attention to that. Okay, it's important to understand that you can actually get a business loan. I mentioned a business loan is great. A business line of credit is great for short-term expenditures. So I want to see that you have enough cash to cover some of your short-term debts, to pay them back, and to also be around in the long term. Okay, so this is important. When we talk about business line of credit, we're talking about having extra cash for liquidity management. And it's also important to understand that when we talk about business debt, you also want to pay attention to your statement of cash flows, because this will actually tell the lender whether or not you are generating enough cash from operating activities, investing activities, and financing activities. The bottom line is that when all these things can be projected. In other words, you just want to explain to the lender in your business plan that you have thought about everything, and that the numbers that you are projecting are solid. They are healthy enough. Speaking about cash flows, this is important. Money. You need to pay attention to your cash flows, okay? You need to demonstrate to the lender that your liquidity is strong. Talk to me about your liquidity, boss. Do you have strong liquidity, or do you have lethargic, anemic liquidity? Talk to me about that. Okay, so how do you actually find out? You want to pay attention to your statement of cash flow. I just mentioned it, and that statement of cash flow has 3 categories that are important. A lot of folks, so if you have no LLC, I'm not asking you to give me actual data. I'm fine if you have projected data, okay? Because that's what it is anyway. If you are brand new, you've been around for 3 months or whatever, you're just starting your operations. Everything has to be projected, but make sure your projections are solid. I mean, you're not really using unrealistic projections. No. Okay, hey, I want you to make it plain for me. Also, I want you to explain things for me, and I want you to tell me how you got those projections. Okay, what are the assumptions? Did you get that? It's important. Don't try to razzle-dazzle me or the lender with fancy projections based on unrealistic data. Who needs that? What's up with that? No, you got to be clear. So if you're telling me that you are growing sales by 10% every month, you better have a clear idea how you got that number. Okay, I don't want you to really give me like some sort of fairy tale about, oh, I believe the conditions in the industry are kind of good. You know, I think that 10% is real. No. Hey. You want to base your calculations on solid, on compelling evidence that tells you that clients are going to move into the industry, or that your sales will grow eventually or actually by 10%. Okay, and so the statement of cash flows has 3 categories. You have operating activities, so you have cash flows from operating activities, cash flows from financing activities, and cash flows from investing activities. And what you want to pay attention to is the cash flows from operating activities, because this is how you generate the money. This is how you generate the money, because one thing you need to understand: a line of credit works in a very crazy way. When you open a business line of credit, the business receives access to a stated amount of funds to use as needed. So a monthly statement reflecting the amount of credit used will also include any interest charges. Unlike a term loan, you only pay interest for the funds you use as you use them, right? And you're gonna have to report your business line of credit in your cash flow statements and also on your balance sheet. So you need to understand that your payment and the interest is based upon the funds you use. Once repaid, the credit limit is available to be accessed again as needed. Okay. And one thing I want to say here is that there are a few tips on keeping a business line of credit. You want to periodically pay down your balance and avoid keeping your average running balance near your credit limits. Using a line of credit to cover operating losses is not the best option. It will make repayment difficult. And you want to think strategically about your capital assets, your capital needs for the year to determine the best time to apply for a line of credit. This is important, okay? I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about business lines of credit for a new business, how to get a large limit no matter what. It's important to take care of legitimacy. I want you to be legit. Don't try to run the no sort of a small ass store or no small ass gig, and you're trying to get a large limit. No, you better have a legit business. Okay, I'm talking about having an LLC, an S corp, a C corp. A real company you can be proud of. Don't try to mingle your personal affairs and your business affairs. Who needs that? What's up with that, boss? Talk to me about it. No, I'm asking you today, right now, if you are thinking about starting a new business and your goal is to get a large business line of credit, I'm asking you to divorce your personal affairs from your business affairs. You got to do it quickly. You got to do it right off the bat. Don't do it as you start your business and I'm gonna start with a sole proprietorship, and then later on, and then eventually, and then whatever. No. You want to start from the start. You want to basically segregate your personal affairs from your business affairs. And how you do that? You basically create a legit company with an EIN. You want to apply for your EIN, your employer identification number. That's your company's social security number. This is how you're going to do everything. Okay, you want to choose the right legal structure in the state you're applying from, because business registration is a state affair. Okay, so you wanted to choose whether you want to have an LLP, an LP, an LLP, an LLC. You want to have an S corp or C corp, and you want to think about your accounting systems. It's important. You want to have the right accounting systems, because this is what's going to help you in terms of financial reporting. Okay. Think about your articles of incorporation or organization depending on the legal structure you have chosen. Think about your registered agent. Do you want to do it yourself, or you want to actually hire someone, or you want to hire an online provider, a service provider to kind of take care of that for you? Because registered agency is important in terms of compliance, because the state's authorities will send any official business correspondence to your registered agent. And I really advise you not to do it yourself because of privacy and other reasons. But yeah, you have to think about licenses and permits. Okay, you want to get the right licenses and permits. This is important. If you hire staff, okay, even if they're a family member, you want to report that staff to state authorities. I'm talking about reporting them in terms of new employees. It's important for them also in terms of employee insurance, unemployment insurance also. And okay, you want to set up a business bank account, open business account, and take care of your financial statements. Take care of financial statements, okay? If you have to hire someone to take care of it, if you have to outsource the whole thing to an outside accounting firm, or you want to hire an in-house bookkeeper, or you want to book a local CPA, whatever it is, the choice is yours. The next thing you need to do, and that's the last thing here, is you need to apply. Okay, so when we talk about, if you don't apply, you're not getting a large business line of credit, okay? You need to apply for that line of credit. So you need to understand that lenders want to see financial records and documents that demonstrate a track record and demonstrate credit worthiness. Now, the thing is, if you're brand new, if you're the new kid on the block, you have no experience, you better have a few things to show the lender that you are legit as a person, but also as a business. So you want to show, I just mentioned that your licenses and permits, okay, your tax returns, your personal tax returns. So I'm talking about your 1040 for the last 3 years. If you have already filed 1 year of a tax return at the business level, you want to attach that also. I'm talking here about your 1065 or your 1120, okay, 1120 S or C. and you want to have a 2 or 3 months of bank statements, and it's really important to have bank statements at the business level. So earlier I was just talking to you about having a business bank account. Now you want to show the lender. See, it's all about showing the lender that you can segregate. That's the key word here: segregation. You want separation, divorcing. You want to segregate your personal affairs from your business's affairs. Okay. You want to also you want to have a standard financial documents. Like I'm talking about P&L, profit and loss, accounts receivable, accounts payable, cash flows, if possible. One thing you need to understand is that if you cannot do this yourself, you want to hire someone. Don't try to reinvent the wheel, okay? I'm not asking you to reinvent the wheel. Who cares if you have no knack for talking about finance all day long? You don't have to. Hire someone. Hire someone that can explain to the business lender your financial position, okay? You want to have someone who understands the language of finance. It's a great investment. If you're asking a $100,000 business line of credit, it's worth it. It's a good ROI to hire someone and pay them $200 or $300 to speak for you. Okay? When you go to court, if you go to court, do you defend yourself? No. You hire a lawyer because you know that lawyer has the expertise and has had the training to talk on your behalf, because that's what he or she does all day long. It's the same thing when it comes to hiring a senior accountant or a CPA to explain things to you and to explain to the lender your financial situation. Okay, and one thing you need to be clear about is you need to tell the lender that your business has a plan for the line of credit to cover specific expenses at specific times, and you can demonstrate your ability to make periodic payments. Because the thing you need to understand, the lender doesn't give a shh about your balance sheet, really. He or she doesn't give a shh about your income statement. What he or she cares about is your cash flows, your liquidity. Because if I'm giving you cash, if I'm giving you money, I want to be sure that you will be paying me back. That's what I care about. Okay, so you need to understand that before you apply for your chosen lender's line of credit, please understand your qualification criteria, the loan conditions, the interest rates, and fees. Okay, so you need to really have a clear idea about that. And also, one thing I also want to say is that some lenders will actually charge you an origination fee. Be clear about that right off the bat so you're comfortable about the cost of the line of credit. Thank you so much for your attention, folks. In today's conversation, I was just talking to you about how to get a large business line of credit fast, no matter what. Number one, you want to target the right lenders. Number two, you want to have a business plan. Number three, you want to have a funding focus. Number four, you want to have you want to think about your business debts. If you have some, think about your cash flows. And number six, you want to get your business legit, make it legit, all right? And number seven, apply properly. I'll talk to you later. And thank you so much for listening. I will speak to you another time. Until then, remember, stay marvelous.